Hey guys, this is Vic from Grasping the Market and welcome to our morning briefing. It's Wednesday, May 8th, 6:15 a.m. So let's get cracking. We have further change on the longer time frame as we probe the April lows and the key 2865 area. The last 4 weeks lows have now been taken, and the big reference left to the downside is the top of this big gap left at the beginning of April. On the daily, the short-term auction is now to the downside, but after a strong rally into yesterday's close, there is a potential for daily excess. As we do with all the potential excess, we need to wait for confirmation of that, but we know that the potential is there. Zooming into the market profile, as we mentioned in yesterday's briefing, the evidence of short covering on Monday, which we saw at the B-shaped profile, and the rejection of the late Monday spike, so we opened yesterday back down, was an important evidence of market weakness. To this, we add the fact that despite trying the open rally to move up, we couldn't reach a very prominent overnight point of control, and then we started pushing down. That was the final clue. In total we had a lot of data points to the downside, and well, the day panned out the way it did. Now, at the end of the day, we had we established value lower and lower and lower and lower. And at the end of the day, we saw this big rally. That could have been a combination of inventory imbalance, the market getting too short, and responsive buying from a key area just above the gap. Now, we don't know, as a matter of fact, what happened. Could have been a combination of both. But that's exactly our immediate focus for the morning, assessing the acceptance or rejection of this late rally. Acceptance above the afternoon high, which is at 28.9175, will signify change and increases the odds of upside and that daily excess left being confirmed. Now, if we have acceptance and value below the settlement, which is all this area over here, that increases the odds for continuation, and we need to keep in mind that there was a very mechanical low made at 28.6250 is the low from yesterday, but this one, 28.6225, is exactly the low from the 2nd of April, which is the last kind of daily reference before we touch this gap. So it was a very mechanical low, and we need to keep that in mind. But remember, as we keep saying over and over, we follow odds, but odds are just odds, so anything can happen. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.